Diplomatic relationship between Canada and China appears to be on the mend after years of strain and a more recent escalation in trade tensions.
Those discussions will deepen. I will expect at the appropriate time to be meeting with President Xi Jinping.
It began with a whisper, not a public statement, not a tweet, not even a leak. Just a quiet message that crossed the Pacific and landed on a polished desk in Ottawa. The note came from Beijing, stamped confidential, carrying a proposal so bold it sounded almost unreal. China's ambassador had made what officials are now calling the Golden Deal, the complete removal of tariffs on Canadian agricultural goods, every single one. The catch? Canada would have to lift its 100% import ban on Chinese electric vehicles. No gradual talks, no multi-year framework, just a direct exchange. One move, and nearly $5 billion worth of frozen Canadian exports could start moving again within weeks. To some, it looked like salvation. To others, a trap. For years, Western Canada's farmlands have been suffocating under trade restrictions. Canola fields that once shimmered gold beneath the prairie sun now sit half-harvested. Silos overflow with grain no one is buying. The hum of once busy production plants has faded into uneasy silence. Since early 2025, a market that once sustained entire towns from Saskatchewan to Manitoba has been closed off. Then came this offer, a lifeline from Beijing that could revive those quiet fields almost overnight. But behind the spreadsheets and shipping forecasts lies a far deeper question. Is this truly a trade deal? Or a test of Canada's allegiance within the North American bloc? It's no secret that Ottawa followed Washington's lead when Donald Trump returned to the White House. Under pressure to stand shoulder to shoulder with the US, Canada imposed its own 100% tariff on Chinese EVs, despite having little direct stake in the dispute. The move wasn't about protecting Canadian automakers, it was about solidarity, about showing unity inside the fortress of North American trade. The cost came swiftly. Within weeks, Beijing struck back with heavy duties on Canadian agricultural exports, 75.8% on raw canola, 100% on canola oil and meal, and further penalties on pork and seafood. The retaliation worked. Shipments slowed, warehouses filled up, and farmers begged for subsidies just to keep their lights on. Now, China's message is clear. Remove your EV tariff and we'll remove ours. A perfectly mirrored offer, and a calculated challenge. Across the prairies, the reaction has been immediate and emotional. The premiers of Manitoba and Saskatchewan are urging Ottawa to accept the deal. Let us sell again, they say. Let us breathe. For rural communities, this isn't abstract policy. It's about survival. Reopening the Chinese market could send trains full of canola rolling eastward again, restart supply chains, revive local credit unions, and bring back the rhythm of life that trade once sustained. Economists estimate that lifting China's tariffs could pump billions back into Western Canada's economy. But for every voice demanding action, another warns of risk. What happens if saying yes to Beijing fractures Canada's alignment with Washington? Could this deal unravel decades of North American integration, first under NAFTA, now under the USMCA? Inside Parliament Hill, the debate is fierce. Some lawmakers see the offer as a once-in-a-generation chance for Canada to prove it can act in its own national interest, without waiting for America's permission. Others call it economic blackmail, a wedge meant to exploit Canada's internal divisions between East and West, between farms and factories. One senior official, speaking off the record, put it bluntly. This isn't about canola or cars. It's about control. The story of how Canada got here began a year earlier, when Trump announced sweeping 100% tariffs on Chinese electric vehicles. US officials claimed it was to protect American industry from an influx of cheap, high-tech imports. Canadian leaders, wary of US backlash or being labeled unreliable, quickly followed suit. But Washington gave nothing in return. Instead, the Trump administration began pressing for new restrictions on Canadian exports, even threatening penalties on auto parts if Ottawa didn't fall in line. For many Canadians, it felt like déjà vu, another era when national policy seemed dictated by someone else's capital. Then came Beijing's counterpunch. China's Commerce Ministry announced its retaliatory tariffs targeting Canadian canola, pork, and seafood, products grown and processed thousands of kilometers from Toronto or Montreal, but now caught in a geopolitical crossfire. Prairie farmers suddenly found themselves fighting a war they never started. Now, China's Golden Deal has turned that economic war into an ultimatum. Accept and the sanctions vanish. Refuse and the world's second largest market remains sealed. For Western premiers, the math is simple. China once bought nearly a quarter of all Canadian canola exports, trade that kept thousands of families and rural economies alive. A single handshake could reopen that floodgate. But in Ottawa, simplicity rarely survives contact with geopolitics. Prime Minister Mark Carney faces a dilemma no leader envies. Protect Ontario's powerful auto sector, already anxious about competition from China's sleek, low-cost EVs, or rescue the collapsing agricultural heartland that feeds the nation's west. Either choice carries pain. Ontario's Premier Doug Ford has already warned that lifting the EV tariff would unleash a wave of Chinese imports, threatening tens of thousands of unionized jobs in his province's auto industry. Losing Ontario, politically, means losing elections. Meanwhile, out west, patience is wearing thin. Saskatchewan's Premier has accused Ottawa of blind loyalty to Washington, calling it a betrayal of common sense. Local trade boards echo that frustration, describing the 100% EV tariff as a weapon turned inward, one that protects no one and punishes the sector still keeping Canada's export economy afloat. In towns like Brandon, Dauphin, and Leduc, the human cost grows heavier by the day. Silos overflow with unsold grain. Processing plants sit idle. Credit unions tighten lending. Young farmers talk about leaving for the cities. The proud agricultural backbone that once defined the prairies is beginning to buckle under the weight of economic strain. Through it all, Beijing waits patiently. To Chinese strategists, Canada's canola isn't just food, it's leverage. It's a dependable plant protein alternative to American soybeans and a powerful bargaining chip that fits neatly into China's broader goal of securing clean, stable food sources. Some analysts have even begun calling this potential exchange the Green Trade Pact, a symbolic swap of green energy technology for green agriculture, electric vehicles for renewable crops. On paper, the idea is elegant. In practice, it's explosive. Because what China is really offering Canada isn't simply renewed market access. It's a choice between dependence and independence, between old alliances and emerging realities. And time is running out. With every month the tariffs remain, the economic wounds deepen. In Saskatchewan, exports to China have plunged by 76%, dropping below $100 million by late summer. Manitoba's pork producers are reporting annual losses exceeding $19 million as they scramble to find new buyers at lower prices. For the first time in decades, China, once Canada's largest agricultural customer, has closed its doors completely. Inside Ottawa, every statistic has become a pressure point. Every farmer's protest is a reminder that the West is growing restless. The canola crisis has become more than an economic standoff. It's turning into a test of national identity. How much is Canada willing to sacrifice to stay aligned with the United States? And how long before that loyalty starts to crack under the weight of regional despair? Meanwhile, across the border, the story is playing out in reverse. While Canada's prairies wait for the trains to roll again, America's farmlands are falling silent. For decades, China was the largest buyer of U.S. soybeans, purchasing nearly half of all American exports, a trade worth over $12 billion in 2024. But by the summer of 2025, that market was gone. This season, not a single Chinese order has arrived. Zero. The ports that once shipped millions of tons of Midwestern soybeans now sit quiet, cranes idle, warehouses half-lit. Farmers across Iowa, Illinois, and Nebraska are watching their harvests rot in storage. According to the Financial Times, Brazil has stepped in to fill the gap, seizing nearly 3/4 of China's soybean market and pushing US producers out of one of their most profitable arenas. The US Department of Agriculture estimates the break has cost American farmers more than $9 billion a year. Towns across the Midwest are feeling the shock, layoffs, bankruptcies, and growing resentment that the trade war meant to make America strong again is instead bleeding its heartland dry. And in that vacuum, Canada suddenly finds itself standing at a crossroads. China's pivot away from the US has created a rare opening, a chance for Canadian farmers to reclaim their place as trusted suppliers. Beijing's interest in canola goes far beyond cooking oil or animal feed. It's about diversification, building a stable food network independent of American exports. In a world where trust and reliability now outweigh low prices, Canada's reputation as a consistent, rules-based trading partner could be its most valuable asset. But seizing that opportunity means making a move Washington won't like. Inside Ottawa, the Prime Minister's office has become the stage for a quiet tug-of-war. On one side stand the Western premiers, insisting that the EV tariff is destroying livelihoods and must be lifted. On the other side, Ontario's industrialists, unions, and lobbyists warn that removing it would unleash a flood of Chinese competition. Cars cheaper, cleaner, and more advanced than anything North American factories are ready to build. At the center of it all stands Prime Minister Mark Carney, listening, weighing, and aware that whatever decision he makes could define not only his political legacy, but Canada's global standing for decades to come. Ontario's Premier Doug Ford has already made his position clear. He calls any move to lift the EV tariff economic suicide, warning that Chinese automakers like BYD and Geely are ready to flood Canadian showrooms with low-cost electric cars. Ford argues that Ontario's auto industry, centered in Windsor, Oshawa, and Oakville, would be the first casualty. So the question remains, will Canada hold the line with its closest ally, or chart its own course toward a new kind of partnership, one painted in shades of green and gold?